Good evening, people. It is Wednesday the 9th, and let's do a quick review for today's price action. So, this whole trade war thing is starting to become a bit of a joke at this point, you guys. This morning we come into the day, and we're popping to the upside on optimism that a partial trade deal could be met soon. Then you got this big move down here overnight, after hours now, and we go to cnbdc.com, and what do we got here, right? Dow futures dropped 300 points after Chinese media reports that trade talks have made no progress. So we have the president tweeting that a deal could get done sooner than a lot of people expect. Then the next day we're fading to the downside because there's skepticism that a deal is in sight. Then here this morning we're jumping to the upside because all of a sudden now there's optimism that a deal can get met. And here we are after hours already dropping back to the downside. So guys, at the end of the day, this whole trade war thing is really starting to become, a lot of BS. Until we get a deal, and until that deal is signed, and until that deal is put into action, it's just noise, right? All of these pops, all these crazy moves that are taking place because of these, trade war tweets and these little news pieces, they're just a bunch of noise, So you've got to respect the environment right now as a trader. And you've got to respect a few things that are going on. First thing you've got to respect are these trade war talks that are taking place this week. It's very likely that while this is going on, we're going to see moves like this. You're going to see all this aggressive volatility. So you need to be mindful of that. You need to have a game plan on whether or not you even want to get involved trying to day trade in that environment. And the even more important thing to focus on here, if you watch my previous videos, if you're in the Focus Trades group, what we've been talking about lately is this key 295 level, guys. So as long as the S&P 500 is beneath 295, we want to be really careful. This is a level here starting back in October where we've seen some big supply come into the market and some serious damage come in. October to December, we rally right back to 295 in May, right back down, and what we have right here really looks to me, guys, like a repeat of August, where we get that initial drop beneath 295, gap down, just like we had right here, and then it's just a bunch of back and forth chop where the market sucks everybody into that 50 MA, everybody jumps in, looking for that same breakout, and right back down we go. So we're in a choppy environment, we're underneath a really important level where we have seen some big time selling coming in, we're seeing a lack of big buying volume really anywhere right now, and we have trade war talks. So I mentioned this earlier in our chat room, part of being a trader, and especially part of being a full-time trader, is knowing when to take action and knowing when to step back and wait for your opportunities. So with that being said, guys, I'm being patient here, and I'm not really looking for opportunity until we make a big picture move. And a big picture move for me is either going to be a breakout above 295 or another failed breakout, looking for another rejection and flush to the downside. And if we do go down here to support at 282, I'll be looking for a bounce or a potential short if no buyers step in and we leak lower. But I just want to remind you guys, as long as we're beneath 295, we're going to see a lot of volatility and we're going to see a lot of choppiness. So trade war aside, not really surprising to see this taking place here after hours. So for those of you holding calls overnight, just understand the risk you're running right now as long as we're beneath 295 and as long as we got these trade war talks circulating around over our heads. Alright guys, quick trade idea for you, and again, this is just a trade idea. It's not a suggestion, it's not a trade that I'm even going to be looking at taking. It's just a trade idea to get you guys an idea of different kinds of options trading strategies. So today, one of the strongest names in the market was ROKU, up over 9% on the day, and with a few days left in the week, what we'll often see, guys, is some profit taking on names like a ROKU that have made a big time move here. It's not out of the ordinary for this thing to slow down into Friday as you see some profit taking coming in. So what a lot of traders are going to look for is an opportunity here to jump into puts on ROKU. But what's the danger of jumping into puts, especially on a name that has been so strong, is that the strength continues and then your puts obviously get freaking crushed. So the alternative here for a trader who is looking for profit taking to come in and looking for a short opportunity in a stock, the alternative to jumping into puts, trying to short a strong stock, is to sell the elevated out-the-money calls. When the stock is exploding like this, the out-the-money calls just get, just like steroids, they get injected with all kinds of juice, the premiums get big, and that's a great time to go and sell those out-the-money lotto calls. So if you were looking here for, the next few days into Friday for Roku to slow down and possibly pull to the downside as profit taking begins, rather than jumping into puts, what you could do is sell what is known as a call spread, where you're going to sell out the money calls, looking for them to go down towards zero as expiration approaches. So what you could do here, even if you're looking for this move to possibly drop to the downside over the next few days, is go to next Friday's expiration. That allows you to go way out the money, sell the 124 calls, and you're going to buy the 126 calls. And here's how that trade works, guys, right? If Roku even starts slowing down, right? Keeps moving higher but slows down. If it goes sideways, if it goes down a little bit, if it goes down a lot, the premiums here on these puts that just got injected today are going to get crushed. So if we can short those calls, if we can short those calls at 290, 296, and they get cut in half, we get to collect all that premium. So you can risk on a trade like this less than $300, make a little bit over $100, and here's how this works. You're going to sell those puts all the way up there at 124. With Roku trading at 118 right now, that's about 5% above the current price. So the only way that you're going to lose money on this trade is if Roku rallies all the way up here, another 5% plus, to 124 before next Friday's expiration. But the way that you can quickly profit on this trade is if Roku just simply slows down, or even better, begins to drop to the downside. If it begins to drop to the downside, well, the calls that you shorted, they begin to lose a bunch of premium. You get to collect that as profit, and it's a winning trade. So for those of you guys looking for ways to, short stocks that might look a little bit overbought, or you think potentially are going to pull back as some profit taking comes in, a call spread's a much safer way to go about that trade. So hope you guys enjoyed this video. We'll see what happens over the next few days in the market, man. I'm being patient. I'm chilling. I'll see you guys in the next video.